Can you guys hear me? Anybody? No.
I can hear you. I don't know if you can hear me.
Paul, I can't hear you. Oh, I got you now, Paul.
Loud and clear.
There we go. Okay.
Your screen. All right, I got that going. Michael, can you quote tweet the tweet from last night and tell them we're live?
Yep.
All right. Why is that not? All right, cool. And everyone, we are live. All right, cool. All right, be right back.
Just so you know, Mike, your keyboard is got a microphone in it.
I mean, honestly, I need to ask Greg about that because when he was doing his live, his was loud. I honestly don't know what to do about that.
Yeah, I mean, not a biggie, just.
Yeah. I don't, other than just muting myself every time, I guess. I don't know why it's so loud. Get a different keyboard. Yeah. Just don't pound the keys as hard, right? Is that what you're saying? I'll move my microphone back a little bit. That could be it. Who knows? Good morning, trading in NWA. Very interesting name.
Northwest Australia.
Yeah. There you go.
North of Perth. Who knows?
Yeah. Northwest Arkansas. Oh, completely wrong. Well, I'm going to
Since I was in Brisbane, I had Australia on my mind, you know.
That was classic. I like the NWA though. I mean, so that's good.
All right, we'll give it a couple more.
Yeah.
We'll give it to 10:05 and let some people trickle in.
All right, I'm going to go get another cup of coffee. I'll be right back.
All right.
All right.
Cool.
Michael, can you post a link to that spreadsheet for the P2P?
Yep. In Discord, you mean?
Yeah, just post it with those posts you do every morning.
Okay. Oh, yeah. Yeah, they've probably been. Yeah, I've been slacking on that.
That's weird. Paul can't start it. You should be able to start it.
Yeah, you should be.
All right. Yeah, we can show them after.
I muted one of your things down here. I don't know if it was your phone or what it was, but.
Oh, I don't know what that is.
Yeah, it was really loud. So.
Oh, I may have. Oh, yeah, it's my phone. Sorry, I was at the gym when I posted that link, and so it's probably getting the coffee grinder.
I was like, "What is that?"
Yeah.
Is that a keyboard trading in NWA? ProtoArc? Probably.
Yeah, that was the coffee grinder. Sorry.
That's funny. I was like, I don't know what he's doing or what he's doing. Okay, I'll check it out. Trading in. Thanks. I do need a new keyboard. My 0 key keeps sticking, so that could be a good or bad thing on my trades. I don't know.
So if you guys have any questions, let us know. Happy to go through them. If not, probably just the last 3 days, in my opinion, were pretty good examples of different ways you can use the intraday volume tools. By what I mean by that is Wednesday, right, was just a definitive selling day, right? And it was heavy selling all session. We sliced through the spaghetti models, which is the spec command, right? Thursday had some selling, but not as aggressive because we held those spaghetti models, which is generally what you see on a day-to-day. And then right Friday was just a gradual grind higher, went up to the top of the spaghetti model. So, 2 down days, 1 up day, but you saw distinctly different behavior in how the or I guess different ways you could have seen that selling. So first off, just so we get grounded, maybe I have my days wrong. I don't remember at this point, but so you can see here we're just looking at the market trend model. Let me get this so you guys can see it. So this was Friday, Thursday, Wednesday, Tuesday. So Tuesday, right, we lost TC3, right, which is our bullish momentum indicator that gates the P2P strategy and the wheel strategy. We can hit on the P2P here in a minute. We updated the performance on that. Right, so, dimmer switch swing trading was turned off there. Aggressive selling all day on Wednesday, filter tick, right, which is a measurement of large selling transactions coming into the market. Kind of just a linear down day in the afternoon. I guess early morning, late afternoon there. Wednesday, more selling. Thursday, more selling. Friday, saw a reflexive bounce higher after 3 aggressive days lower. Is this the start of a new uptrend? No idea. We're going to wait to see, if we see follow through, right? That's the one thing we were talking about, earlier last week is we wanted to see follow through that we didn't see, or maybe that was open mic on the Sunday, actually, that we were kind of at a crossroads in terms of what the market trend model was saying. So, right, our bullish momentum indicator is turned on, TC4. That is going to be turned on again come Monday. Right, as we always say, that is kind of the most fickle signal, but that is your best risk to reward signal because it's the brand new one. But right, those trades that we enter on Monday, if we see more selling and a loss of this signal, then we will be closing those trades as well. Because again, remember this is a fresh signal after what was undoubtedly a linear up day on Friday. And if you read the SPX game plan on Friday, conditions weren't great. Put dominated conditions below transition zones. The Vanna element was there on kind of an intraday basis, but in terms of a swing trading environment, and if we see a sustained move higher, we'll want to see working above the transition on our SPX top quartile analysis, and then seeing calls come back in above the spot price to dominate. And we can get kind of into the tangible ways of how you see that. But as the opening monologue, Paul or Mike, do you have anything else you want to add there?
Just the linear up nature of Friday. It's a unique signature, right? So when you see, so you're in the Discord, you see out of the gate Friday morning, you see that reversal of that white line. That's the one on the bottom there. That's the CT. That's the cumulative tick. Right? And that thing just started taking off, right? So the first light bulb that pops in your mind is that we have consistent buying. Now, the filtered cumulative tick, that heavy cyan line at the top there, that wasn't aggressive, right? The market wasn't sure from the bigger boys and girls perspective. Yeah, it ticked up a little bit. It wasn't crazy. What's important here is that line, that white line, started really taking off at about 10:30 Eastern time. And you can see that the filtered cumulative tick started taking off. Both of them have an upward slope, and it's fairly consistent through the day. That means demand for net buying was there minute over minute over minute. So why is that important to your trading? If you're thinking, oh, this is going to reverse, it generally does not reverse under these conditions. The market, the broad participation of the market was buying. right? And then you could see also the 52-week new highs were immediately outpacing new lows at the very, very top there. So that with the game plan, with some of the other discussion that was going on in the Discord, with some of the other tools that we'll probably get to here today, you had a confluence of indicators that were telling you, get on the bus. Now, whether that bus is going to be multi-day, whether this is just a vanish short covering rally and it's going to fizzle out after day 2, Monday, day 3, Tuesday, we can all speculate. Your crystal ball is as good as ours. But when we see intraday stuff like this, once you do this more and more, you'll get comfortable with what it's telling you. And a linear up day is a strong buying day. Get on the bus. That's all I got to say.
Yeah, if I had to be nitpicky, for the sake of just being nitpicky, the one thing
you
someone's got to do it right. Historically, those reversals we see right off the open are more prone to failure than the reversals that we see on a intraday basis. So that's not to say like this was completely valid linear up day, but just for the sake of all rainbows and butterflies, which it may be, it's just this was a great day. We just want to see follow through, right? Just want to see a continuation day early next week.
Yeah, 100%. So underneath the CT, you see what we call the railroad track pattern. And we call it the railroad track pattern because if you look before Friday, it was roughly those 3 moving averages are parallel and pointing down, right? So the CT was pulling them down. And there's generally a slope limit, whatever. They make them all parallel as the market sells off. When the CT crosses through those, that's your first aha. Something's not like the others. So to Taylor's point, you start the day kind of bearish or kind of, I don't know if the market's going to, basically, because we're underneath the ribbon, the market's going to get weak and, we're going to check out. But as we cross through that railroad track pattern, and then you start to see them turn, in the Discord, up in the technical questions, we actually did a little quick R&D study for everyone several months ago about going long with either QLD, which is the 2X ETF on the Qs, or pick your favorite, whatever, right? SSO, which is your plus 2X contra, or 2X on the SPX or on the SPY. What we found is that when you get that confirmation of the crossing, so look at how those 3 white moving averages now crossed over each other and now are pointing up. When that third one crosses and the CT's above, go for it. So there's your confirmation. So even if you were nervous about the morning, there was definitely stuff in the afternoon. And then you couple it with all the other stuff that we have. Basically, it was telling you, get on the bus. Yeah, and a lot of people did.
Yep, 100%. The other thing I just went back and I got them. This is the way I was just looking at it, right? As I say a million times, those teams playing the Super Bowl, I've watched a lot of game film on what has happened throughout the year. And so we're going to do the same thing here. We encourage that, right? So I understand this is hindsight, but it's Saturday morning, the market is not open, so I don't know what else to do than look back at the tools to recognize, right, kind of what happened and how we can recognize those signatures going forward, right? Because everything we've been talking about on the market trend model, that's all based off of past observations. And so, if we would have seen this linear update on Friday, if we would not have reviewed and understood what happened historically when we see that signature, we would have been like, oh, cool, look at that line. Not sure what to do with that. But because we've gone back and we've reviewed, we understand what the probabilities are to take place. And so with that, 2-3 was Tuesday. Yeah, right. So Tuesday, had that Tuesday, Wednesday. Yeah, so Tuesday, had pretty aggressive selling all session, but really, into the morning after London close and in the afternoon. Then Friday, right, a little bit of selling, kind of weak. Sorry, Wednesday, a little bit of selling, kind of weak. Thursday, a little bit of selling, kind of weak. Then Friday, aggressive buying. And so, showing how this speculative chart works. If you guys are not familiar with this, probably makes sense to show a centroid chart real quick. So, right, a big thing that we do, right, at Gamma Edge is first we understand the structure, and the way that we understand the structure is through our web app and a couple other various tools, and this is all documented for you in the pre-market prep. So here, right, this is just a visualization of the SPX 0DT structure in terms of, positioning, how folks are positioned strike by strike, and then, taking it at an overall picture where the transition zones are, where the key kind of sticky levels are, right? And there was a good discussion yesterday on, quick definition between what are levels and what are transition points. So yeah, we understand kind of where that is, what the if-then statements on, if this happens, then we're going to go here. If that happens, we may go here. And then, once the market opens, people are then transacting. And so we want to understand in the context of that structure and that game plan, where are folks actually placing their bets? Where, what's their behavior suggesting? And that's where we look at the SPX 0DT volume, specifically, right, calls and puts. That's all you can look at. And what we do is on a 5 minute over 5 minute basis, we bucket call and put volume separately, right? Forms a distribution. We find the middle of that distribution, which is a centroid, and we plot that. And so throughout the session, right, we're plotting those 5 minute dots, connecting the dots so we can understand what the behavior of the call and the put speculators are. And that's very beneficial because, right, we can understand, okay, is their behavior trending higher? Is it trending lower? Is it trending sideways? And then all else equal, we can project out where those centroids are likely to go through the close, meaning, from 9:30 to 11, right? We have all those centroids plotted. So then, right, we can, make an informed guess of all else equal. If that path of centroid speculation is going to continue, where is that going to go into the close? And then the reason I went down that rabbit hole is because we then have developed these charts, which are a derivative of the centroid charts. And what those do is those just kind of break out that centroid into more granular picture in terms of this red line. It's really understanding the behavior of cohorts making up that centroid, right? So the above call, below puts, again, solid is call, dash is puts. And then down here, you'll see C50, 40, 30, P, 20, 10. So C50, the red line, that means that 50% of all call speculation is at this spot and below. And then 50% of all put speculation for the dash red line is that spot and above. And then we have 40, 30, 20, and 10. And again, this gives us a very good picture of kind of how the behavior of speculation throughout the session. And oftentimes what you see price kind of respecting these boundaries, and these boundaries represent good kind of, reversal points, for lack of a better term, throughout the session. So, that's informing you if you are a credit spread trader. You can understand not only the direction of speculation, i.e. where price is likely to go, but you're also kind of able to understand where the upper and lower bounds of that speculation are. And price generally doesn't go where transactions are not happening. And so like Tuesday is an example, we saw aggressive selling, and kind of a tell for me is we just sliced right through the spaghetti models, which doesn't happen very often. And so that just is a good indicator again of kind of the aggressiveness of the selling that we were seeing, right? And contrast that with, this would be Wednesday now. Wednesday still had aggressive selling, but right, was not as aggressive as that would have been Tuesday. Sorry, struggling working backwards here. Saw a bottoming kind of right where we expected it to be. Good risk to reward trade here. I know a couple of folks in the Discord took it, and away we went. Thursday, this is kind of much more of what we've seen for the last month and a half in terms of just very choppy price action. You can see the spaghetti models, especially to the call side, holding firm throughout the session. Put sides kind of sideways to higher throughout the session, and then Friday, which is kind of a sideways to higher grind throughout the session. That call centroid sign, or the call speculative level really not, spiking higher throughout the session, just kind of meandering, sideways higher throughout the session. So that's the way that I think about the tools, at least. It's really good, combining the kind of level analysis that we outline in the pre-market with kind of what the market trend model is doing, and then kind of like X-ray vision, so to speak, in terms of like how folks are speculating on a 0DT basis. So I guess, Paul, you got anything more to add on kind of the application of the tool, or kind of any nuances or specifics you like to look at?
Well, I think you touched on them, and you see how tight those C10 lines are, the C10, C through C50. That's the ones on the solid lines on the top.
Yeah.
Speculation didn't change for the day. Participants were constantly targeting those strikes throughout the day. So go back to, when you're at 10 o'clock, right? People are targeting up there at 69, 20, 25. Right? So call it 5 delta, 10 delta, wherever they are. So as we start grinding upward, people are coming in, right? And you can look, those lines are horizontal. So although they're, it's a distribution of where people are opening their long calls, no question about it, they all stayed in the same spot. Now, when does that change? You can see a little bit of widening in the afternoon session after 1300 Eastern time there, right? It starts to get a little wider, not much. People were holding on to those 50 deltas. Why do I say 50 deltas? Because once price goes to where you have your strike, you're at the money. You're at a 50 delta, right? So all those people were profitable, and they were just waiting, right? Let price continue to go up. And if you look at, the charm for the day, if you look at where those transition areas were for the day, blah, 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 we said above 69.10, which was what we call DS upper, or drunken sailor upper range, that we were going to start just melting upward, and look at what happened. It did. And that's because where speculators were, and that's where the structure was. Now, that little thing at the end of the day, I want everyone just to say, well, what does that mean? Well, think about what's happening as we go into the close, right? As you go into the close, Greeks are collapsing, right? The range of Vanna, the range of charm, the range of gamma. Gamma is exploding only at the money, right? So the rate of change of delta is high in this particular case because we're in a call-dominated environment. There, that's a nice one. I like that one. So that's relatively important. So Greeks are collapsing, or gamma's exploding, either way. In this particular case, charm is also growing largely, depending on if you're above or below, in the money or out of the money. The net takeaway is that option Greeks really start to have very little effect. And what takes over is what the market makers and the dealers all have to do to get their end-of-day settlements basically registered and completed by 4 o'clock. If anyone's ever placed a market on close buy order or a market on close sell order, so those are standing, resting orders that are out there. Everybody knows about them. And so if the market's buying, right, that means we have a lot of deltas that are in demand. You can imagine that that's going to create a process where you're going to see a lot of, effectively, the tail wagging the dog into the close. So the chart that Taylor just threw up is basically how the New York Stock Exchange, and they're all relatively the same, how they start and when they start processing. So our expectation at Gamma Edge is this. Greeks in the last 10, 15 minutes is a crapshoot. The market had been buying all day. With price moving up like that, there was a lot of demand. Liquidity is, it's all under algo control at that time of the day. Everybody's got their orders in. In that last, 5 minutes, 10 minutes, you can see floor brokers' quotes included in the imbalance calculations. So if you've ever looked at, market on close, and it's, 2 billion to the buy side or 2 billion to the sell side, that's that, right? So we don't try to predict and we don't try to guesstimate. I said, I'll go on record, that I would be surprised if we closed over 69.30. You can see that we did. And a lot of it is just due to those end of day dynamics. We at Gamma Edge, specifically me, I don't trade. I call that, literally the amateur hour, because you don't know which way things are going to go, right? I don't trade that last 10, 15 minutes. I close my trades before the end of the day for that very reason, because you don't necessarily know which way things are going to go. So other than that, those lines tell you a lot, right? And our members, if our members are here and in the chat, speak up, tell us what you were seeing and what you did. But our members use this information, and you can see why, right? It's a pretty good indication of where things are at. So.
Yep.
I don't know, Mike, anything to add there?
Nope. Perfectly said.
I don't know about perfect.
Oh, here we go. Yeah, I think the only thing, I don't really have a ton to add. I think probably the frustration maybe some people felt on Friday, maybe not, is like, I don't know, after 11 o'clock, it was kind of hard to find an entry into this market aside from just buying. The reason I say that is, it was really just a grind higher. You really got no pullback at all, basically hugging just this one standard deviation VWAP band. I know that's not perfect. I don't know, probably because I have pre-market on or whatever. But anyways, it was just a very grindy action higher, really, after kind of this morning volatility. But, that's what happens sometimes.
Yeah, at about 11:40, net stats started flipping more and more. We were right at 7,000, or 6,900, excuse me, 68.99, right at 11:46. And so once you cross that Livermore level of 69, we knew that Drunken Sailor was up at 69.10. Drunken Sailor is that range where if you're below it, you're kind of just wobbling around because market dynamics are pushing you around. Once we got above, that yellow square there, or rectangle, we got up that gradient. So I want everyone to kind of just stop and think about what's happening once you get above the top of that yellow box that you see there. The cyan in that box are long calls in net. So you're in a portion of the structure that is dominant long calls. We know this, right? And if you're second guessing it, then you need to come and learn how we do what we do, because obviously it panned out exactly as we talked about before the market opened. So what happens is you're climbing that gradient. You've got a lot of long calls behind you that are now in the money. Which direction do in the money calls go? Their terminal deltas, which is +1. So they're growing underneath you. That's making your book, your dealer book, shorter, your book longer. And all things considered, that's upward pressure. You couple that with what we saw in terms of volume and call volume coming in, and the speculation that was constant at the 20, 25, 30 range. Those are long deltas going in. Those are long deltas going in the majority. When you put long deltas into a structure, you've got in the money calls, which are long deltas behind you, you're moving up. Once we got over 10, we just ground up. We melted up. Charm. Plus, we had a drop in volatility due to people not needing puts. So we had put closing. And Vanna was set up basically to accentuate what we were seeing. And we talked about that. This was going to be a Vanna rally. All the pieces came together. We talked about it before the open. So part of this is recognizing the conditions that can give you the Vanna. And then as volatility was coming out of the complex due to the reduction in demand on puts, coupled with calls going in, coupled with charm, coupled with moneyness, you had a confluence of stuff coming in. So just getting on the bus, to Taylor's point, there wasn't a good entry. We didn't see the volatility because volatility was coming out. So the only thing you can do is get on the bus at some point that you're comfortable. And where would that have been? Long over 2010. Or not 2010, excuse me, 1610. DS upper.
Yep.
We had a lot of people who did it. Yeah, right there, right on the screen, right there. Drunken, don't go back a second to the. Okay, you had it right there. Right there, DS upper, 6910 and unambiguous. Textbook. Study it. Posted at 7:48 a.m., nearly 2 hours before the market opens. Read the structure. It's all there.
Yep. The other good note you left on Friday, they're all good notes, but I posted this one on Twitter. If you missed a move on Friday, like, you shouldn't feel bad, okay? It was just kind of an intraday, move that we saw. And, as Paul noted here, short covering rallies can be fast, much faster than falling. If you increase your short exposure, you better know what you're doing, i.e. you can get your face ripped off pretty quick like we saw on Friday. Cash is always better if you're new to the game. So yeah, that was more or less the PSA announcement we made on Friday. Is right for those that needed to hear it. Cash is a position, and volatile markets that are falling, they're very hard to trade, and there's no shame in waiting until volatility comes out of the market. Because if you listen to all the great traders, right, they always say 99% of their money was made in up markets, not shorting the market. So there's no shame in sitting it out, waiting for volatility to come out, waiting for that next uptrend to start, which we may or may not get a continuation of that on Monday, and we will go from there.
Indeed.
Think well, yeah, Sash, I don't have like a specific, this sector, that sector, but just broadly, right? The SPX was, people like to say because it's not at all-time highs, it's collapsing. So, but it was pulling back, middle of the week. But if you look at RSP, like RSP is well at our all-time highs, which is equal weighted SPX, right? And SPX obviously dominated by all the massive technology stocks. So as the tech sector was getting smashed, obviously SPX is going to collapse a little bit. But to your point about sector rotation, RSP, which is equal weighted, is at all-time highs. So I think you can say with a good deal of confidence that there was some sector rotation going on, and not everything was collapsing.
Dow 50,000. So yeah.
Well, yeah, I think the Dow, which is made up. Oh wait, that's not. That's the Dow. What the hell? Oh, DIA. I never look at the Dow. So
DJI.
But yeah, the Dow, right? 30 stocks, not necessarily technology focused there. Hanging in just fine as well. So
actually, the diamonds have been actually. Just look at that. Look at what you just put up on the screen. Look at how far back that goes. The diamonds have been doing just fine, right? And DBH for the diamonds is solid.
Yeah, this is a good point to lead into for a lot of the people that are joining us. If you join us for the pre-market prep, a lot of people throw tickers in that I don't know. And as soon as I see them, I pretty much tell them already that it's probably not going to meet our OI threshold or liquidity threshold. So I think this is a prime example of why a lot of our tools don't look at a lot of these speculative stocks. Is a perfect example right here. And if you're staying in blue chip, large cap, high liquidity stocks that we're able to look at the dealer metrics and use our web app tools, even if you get and you're in the wheel strategy and you get assigned a stock and it pulls back or goes down, if you're not in some sort of junk, low liquidity meme stock, you're going to be just fine. And I think I express that every morning in our pre-market prep, but stay with the stocks that institutions are trading and you'll be just fine. So just another point to that too. So.
Yep. Yeah, I don't have really a ton else to say. Yeah, I mean,
I can cover our wheel or P2P stuff real quick.
yeah, we'll get to that in a second. I think just putting a bow probably on what we were saying. Yeah, we hit on the intraday stuff. Like what we said right here is completely valid. Yes, we had a 1 day bounce, and like if you're looking for perfection of everything, you're probably not going to get it. And anyone that offers it, I'd probably be skeptical of it. But right, intraday, we were fine. Again, like we were saying, if tomorrow is the next, or Monday is the start of a new uptrend, then we're going to see that too, right? Market trend model freshing or publishing, a new signal. If we look at, true zeros, for example, we look at true zeros on, this is SPXP. You can see we were well below true zeros line. Now we're going to be back above it. If we go back to the SPX game plan, you look at the true zeros for the SPXA. Where'd it go?
Yeah, right there. Oh,
right here.
Right there. Yeah.
Right. We were dipping below that, which is historically not a good sign, right? If you bump this back, look over the past 250 days or whatever, you'll see not a great sign if we're below it. However, also when it's interacting that far below, it's kind of a time when the dip gets bought, to be honest. But anyways, we're going back above that. So right, we want to see, that starts to progress higher. So all that to say, Monday could be, sort of a new uptrend. Just gotta, wait and watch. Paul, I think the last thing, probably on an intraday basis, maybe worth hitting on is, I know we've introduced kind of this new SPX or new NetStat chart specific to.
Yeah.
Well, this is SPXA.
Just go on down section 4. It should be there.
SPXP. So SPXP, right? We've added some more columns specific to kind of what we're looking at the transitions between one condition, like a bullish to a bearish condition or bearish to bullish condition.
Yeah.
So I guess anything just kind of high level hitting on the new changes and kind of what the benefits are that we added there.
Yeah. Yeah. So, I mean, we've been doing this for years now, right? And sometimes, we get an idea and then we build it. Other times the data is yelling at us to build it and we ignore it. And then finally we get around to it and say, wow, right? This is one of those wow moments. So there's 2 columns here to draw your eye. One of them is the left-hand plane expected transition. So it's the direction. And then there's a price that's associated with it. Then if you go over on the right-hand side of the tool, you can see a right-hand plane expected transition and the price. So what is the left-hand plane and the right-hand plane? So we separate moneyness, because of course moneyness matters. We separate moneyness into the left-hand plane below spot price and the right-hand plane above spot price. What is this telling you? What is this information telling you? Part of structure reading is understanding where you are on the structure and what is around you. One of our members from Europe said it best last week. I couldn't have said it any better. So prior to the day, everybody had a plan and they opened their contracts for Friday, the 6th of February. So they're investing, they're executing, whatever the case may be. That creates the structure. So even Thursday, people are thinking about what does the 1 DTE look like. And that creates the underlying foundation upon which we must navigate. Friday, the speculators are dropped onto that structure, and how they interact with that is all determined by what they're bringing to the table, what's in their toolkit, buying and selling, fear, greed, and what the structure is. So those two columns on the left and those two columns on the right, the ones that say expected transition and the transition price, these are where the different Greeks have influence. Now we'll do a separate session on the details, but if you're trying to think about sequencing, we laid it out Friday. We've been laying it out all week so people can understand it. There's a definite, as price moves through different ranges, different Greeks start taking over. Moneyness matters. Understanding where that transition, those transitions occur, is materially important to your trading philosophy. It has to be. Because if you get in alignment with where the Greeks are going, you're going to make money. If you are out of alignment, you're going to have your butt handed to you. It's that simple. So if you try to outsmart the structure, it's going to be there telling you no, 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 no. And so this is our process methodology for identifying when do we enter new locations on the structure. And this information with the transition analysis, the drunken sailor analysis that we do, all give you if-then capabilities. And as many of you know, Section 6 of the morning plan focuses on if-thens. So I would urge everyone to pay attention to the NetStat table. I have a screen open during the day. It scrolls every 5 minutes if you're a gold or a legendary member, and it's incredibly useful. I don't know. If you guys got anything else you want to say about it, go for it. Oh, you're on mute there, Taylor.
I'm sorry. Yeah, it's to your point about having that up on your screen. So we'll show you guys something right now if you promise not to tell anyone else. We'll just keep it between ourselves here. But we're working on getting the hopefully it stays between this public internet group. Please don't show anyone. Yes, what we're doing is we're working on building out a volume dashboard in the web app itself. So to Paul's point, we'll have this up. It'll hopefully automatically update every 5 minutes as we bucket our data. There's a lot of friction, using Discord. People don't like it. Ultimately, we should have everything in our web app anyways in terms of our tools. So that's exactly what we're working on right now. So hopefully in the next couple of weeks, we're getting this up and working. Right now, you can see there's already one bug where this isn't populating, but it's also the weekend. So not crazy. But yeah, this is kind of what we're going towards. We're going to get all these volume commands that we've been talking about today, widgetized in the dashboard. In an end state, right, you'll have a blank canvas. You'll be able to put the widgets wherever you want, resize them based off a minimum size requirement, all that good stuff. But, for speed of getting you guys the tools to use now, we're just going to create probably a 4-quad layout because going to the full widget is going to take a bit of development work. And so if we already have this stuff for you guys, then might as well get it to you. So this is what we're moving towards. If you guys have any, questions, suggestions, all that good stuff, please let us know. But again, this is R&D still in terms of getting the presentation how we want it, and we will go from there. The second one is the second iteration is we know there's a lot of friction with running scans in the Discord as well, and running multiple scans at once and having to have experience in Excel or a coding language to kind of mash those together to understand what is hitting multiple scans, all that good stuff. So we're working on building this dashboard out as well. That should be coming hopefully next week to where you can select, multiple of our scans, right? We have the call scans, we have the put scans, the key levels, other scans that you can select, right? These are just kind of these new call dominate conditions or popular ones that we run. So, right, I have that up there. You can run the scans, you can sort by, number of scans it appears on. Then you can see kind of, the stocks where it's all on on 3 or whatever, you know, you're gonna have different columns to where you can, whatever column of data you like, you can bring over. And then we have this scatter plot at the bottom to where, you know, you can quickly kind of just see, you know, where the stocks are at in terms of, you know, back to our P-Transit plus Gex methodology, where they are, you know, in relation to the, kind of those entry and profit target levels. As you can see, right, there's a bug with the zooming, but I think that's fixed. Our developer fixed that this morning. But yeah, that's kind of, you know, 2 things move in there, and then we're gonna have the wheel. The wheel will be in here as well. We're gonna build that up next after we get this built out. That's just kind of a distinctly different strategy, set of columns and all that stuff. So we're gonna get that in there. And yeah, that's kind of what we are moving towards. And yes, NetStat will be in the web app eventually as well. You know, all of our key commands will be in there, so you can kind of build your mission control dashboard that you want, and all that good stuff. And then to shifting to the P-Transit plus Gex strategy. Can you show why call input centroids were showing down all day, even though the market was rising? So call input centroids were not showing down all day yesterday.
Not a chance. They were in the morning, so there was some limitations that were going on, right? So there's 2 things here that the person's asking, right? That is important here. So the first thing, early in the day, there was a lot of volume coming into the markets, and it was all over the place, right? So this chart, which is the Vol M chart, if you look at the movie for this, you'll see that the call centroid was down in the early part of the morning, right? And if you go to...
Oh, he's talking about...
In the movie, yeah, right there. Right there.
Yeah.
Right?
But put centroid was up, so to his point, I don't think both calls and puts were not trending down.
True, but I want to explain this, because this is why we have developed this. Right? So this, the gold line, is telling you that you've got a downward speculation past 10 o'clock. There was discussion in the very early morning session that this was going to fail as a rally. And if you go back to the MTM, don't go back to the MTM, but if you go back in the copy of this video, this session that we're doing for you right now, and look at the MTM, just pause it there, you'll actually see the MTM was kind of flat in the first opening hour. So not everybody in the market was on board. And this is telling you, when you see that gold line below 0, the slopes are down. So speculation is actually below the endpoints, right? The leftmost endpoint. So there was actually call behavior. Now, Taylor, if you wouldn't mind, go ahead and go over to the spec PS chart, right? Just where we have the C10 stuff, right? And you can see that it raised up very, very quickly before 10 o'clock, and then it came down. So the C10 through C50, look at that area from 69.20 to 69.50 almost. Before 10 o'clock, it went up, and then it pulled back down. Well, it pulling back down means we're going to start pulling that centroid down, and that's why it was negative, because the market was coming down, right? Not prices. Speculation. Vol M teaches us about speculation. What are the speculators? What is fear and greed? So they started off going crazy, and then it started getting very, very tightly bound in the 69.10, 69.20 zone. So once it stabilized, now go back to the movie if you wouldn't mind, Taylor. Taylor, can you go back to the movie?
Yeah.
So if you go back to the movie, right, so there's that downward angle in the call centroid. Put centroid is up, right? So those are closing, most likely, because price is moving up. And then you see how we start moving horizontal now in the Linfit line, right? Speculation, that's the average speculation. That's your 50 delta line, effectively. And look what it did. It hung on underneath 30 for a good portion of the afternoon session. So it did exactly what it was supposed to do. If you go back to that slope PS chart, just kind of relating what you're seeing there to, not that one, the slope chart, sorry.
What is this one?
Yeah, that one. Look at how that gold line approaches zero. That's horizontal. And then it just barely moves above it. It's just a little bit of speculation wherever that is. So it's pulling it up. So I always go over to either where the C10, C50 lines are, the spaghetti lines, or I go up to the vol M lines and look at the linfit, what we call the chopsticks, and just see what the endpoints are.
Yeah.
It's telling you that we're going to be fairly consistent. That's why I made the statement at about 3 o'clock Eastern time that I'd be surprised if we closed over the 30 strike. But look at the call volume that went in right there, right? Yeah, look at that. That's huge call volume at the end of the day. Huge call volume. That's a lot of people buying, right? They're either closing shorts or they're opening longs.
Yeah.
Remember, Friday was a settlement day, right, for equities. So a lot of people, if they're holding equities, want to. Now that's a volume transaction, but the fact that price went up tells me that there was a lot of either short covering into the close. That's what that was on the call side. Or long buying. So I don't know. We'll see. We'll see what Monday holds.
Yeah, the other thing probably worth understanding is user. Your name is @user, so I'm just going to say user. I feel like I'm in Tron right now, like user. You know what that is. But anyways, yeah. Hopefully we answered that question for you and kind of the understanding of how to use this tool. The thing I just want to note is like, to your point, like the put centroid was not trending down at all throughout the day. So just want to clarify that. But call centroid was, I mean, it's technically trending down until like, this point where it starts to level out. That's just where you have to have a loose understanding of math. And just like this period here is just going to have an outsized influence on that line pointing down. But as each consecutive point throughout the day is higher and higher and higher, that's where you're going to get this ramp of the call centroid sign. So yes, I mean, most days we do see this line kind of pointing down, but when you get that bullish activity, you see it ramp throughout the session because the call centroid is being plotted above the line of best fit, right? And so what that tells you is that at that specific moment in time for that 5 minutes, the call buyers are being more aggressive than they have been throughout the rest of market time that's happened before that. We just saw that continue to happen throughout the session, and it ticked higher and higher and higher. And then the market trend model, right, was supporting that buying throughout the session. So that's kind of where you use that mosaic approach a little bit, where yes, you have to stitch a couple tools together, but it's only a couple tools. We're not asking you to look at 5 or 10 different things, right? So, and that's just where, as you're looking at this more and more, it starts to make sense. And as you go back and you look at what happened and be an armchair quarterback, as much as people hate it, that's how you learn and you understand how to use these tools. So tomorrow or Monday, we may see the exact same action where the call centroid is pointing lower, put centroid is trending higher, but now you're not going to be thinking, oh, I've seen this before. That doesn't mean the market's going to move down. There's a chance where it could be moving higher on the session. So does that make sense, user? And then Prison Mike, I think that kind of answers your question too, about it wasn't necessarily like, you can see this was never pointing towards 69.20. However, a few things to tell you. A, the put centroid was at 45-degree angle all day, which you see that any uptrending day, that put centroid is pinned at 45 degrees to the upside, meaning there's no downside speculation. B, the call centroid was moving higher and higher, basically every 5-minute slice throughout the session, as we were seeing here. And then C, market trend model was ramping higher all day with buying coming in. So did we specifically know 69.20 was going to get hit? No, but we knew that the action on the day was leading to, just a grinding higher move.
Yeah, I mean, we're constantly trying to make the visuals here better. One of the reasons that we at GE created the other charts, the spaghetti charts, the C10 through C50 chart versus the Vol-M chart, was to address those intraday effectively reversals. So there probably is a better visualization. We'll continue to work on that. But I think checking a few charts throughout the day, I have on my screen, I have NetStat, and so I have 3 screens. I have a wide screen here, 42-inch, that I can divide into multiple areas. And I just open, so on one screen I have my Discord stuff to keep, track of what's going on in trading chat. And then on my wide screen, I've got one browser window open up to NetStat. And then I also have one browser window opened up to the Vol-M channel that you see here. And they just scroll. And between those, really that, and then watching, there was a question about is the MTM just available for TradeStation? No, it's also available for TradingView. I also have a browser window opened up to the MTM, and I just keep track of what's the slope doing, where are we crossing. It's really about it. And then I open up a brokerage window when I want to trade, whether it be Interactive Brokers or TradeStation. So I don't know. Maybe I'm biased, but I think it can be simplified.
Yeah, so Prison Mike, does that answer your question as well too?
I primarily do weekly iron condors on SPX. Put a trade on Monday for expiring the following Monday, but exit by Friday. Is there any way that you can use Gamma Edge to be more fruitful? Yes, but this is a big but. Taylor, can you go over to the dashboard and do the upper quadrant analysis view for SPXP?
Yeah, pull it up.
So this is to answer the question about what I call path dependency. This will be the last topic that we do here.
Yeah.
So what Taylor just did is he took our dashboard view and he clicked on the bright purple that's in that open interest quartile scale. Right now, this is the upper 25% quartile. And what's remaining in those tiles that you see there are all of the tiles that correspond to being in the upper 25th percentile of strength. Why is that important? If you go to the very top there, it says selected 73%. So 73% of all of the speculation that's going on is contained in those expiries. Okay. Now, why is that important to your question? What we find is that Tuesdays and Thursdays are generally weak. And if you look at this data right here, sure enough, Tuesday, the 10th, Thursday, the 12th, are not in the upper quartile. Why is that important? The SPX is a very unique animal. It's split into 2 different frames, one of them being the AMs, which are not shown here, and one of them being the PM settle, which is shown here. We split them. Other services don't, and it's to their detriment and our advantage that they don't, right? SPX trades very, very differently, very differently. And so if you're opening condors for Mondays a week apart, and you're looking at the SPX data from your brokerage and not separating AMs and PMs, you're probably making a mistake. The reason you're making a mistake is because the SPX PMs, and we see this, turns over in total open interest as we approach it. So the 1 DTE, the 2 DTE have the opportunity to completely rewrite the forward path, in this case, Tuesday, Thursday. Why? Because they're weak. How do we know they're weak? They're not in the upper quartile. Why does that influence what you're talking about? We have other work going on where we call this path dependency. Path dependency, when you aggregate different groupings of expiries, you have different levels of COI, call open interest, POI, put open interest, plus GEX, minus GEX, plus DEX, minus DEX, the transitions move, etc., etc. When you rewrite the surface, and I'm going to tell you right now, Tuesday, Thursday is going to get rewritten, you change your fundamental thesis about Monday. So if you open an iron condor tomorrow, or excuse me, on Monday, for the following Monday, which in this particular case would be the 17th, there is a good likelihood you're going to see values move around. Now, maybe your condor is wide enough that it can absorb it. Maybe you catch the MTM trend so that you stay in an uptrend, or you stay neutral. And in a condor, you want to stay neutral. You want to stay in the middle range if you can. To answer your question succinctly, now with all that background, yes, there is a path dependency that you can use our data for. And sometimes you'll see all 5 days all highlighted. The monthly is always in there, of course, 220, right? February 20th. The Thursday, Tuesday sequence, week, Monday, Wednesday, Friday, with Friday, Mondays being the strongest, Wednesday in the middle of that. So order of sequence, Friday, Monday, Wednesday, Tuesday, Thursday, strongest to weakest. Pay attention to those. If you start seeing plus GEX, minus GEX move around, which are your points of maximum convexity, and if your short legs are inside of those areas, either in the full path when you select, basically the 5 days that you're going to be looking at, you run the challenge of those days being overwritten and those levels being challenged, and your short strikes getting challenged. So be very, very careful about that. This has been eye-opening for me because I've been working on path analysis for another strategy that we have that uses what effectively is a poor man's covered call approach. Poor man's covered call, you're looking out over a year, right? How do you have a path-safe approach? How do you make sure that that long call that you're doing the PMCC on doesn't get challenged given your structure that you have today? Same concept. So I think, yes, you can use the tools. I would not be aggressive in opening a weekly condor unless the MTM stays bullish. That would be my first thing. And 2, I start seeing where the aggregation. Taylor, can you hold down the control key and just select the 9, 10, 11, 12, 13. Yeah. There's your 5 days, right? Look at how wide those bubbles are for plus GEX, minus GEX. That's, first of all, an important consideration. 2, look at the expected range just for Monday. That's over on the left-hand side there with that rectangle around the strikes. Look where COI is. There are a lot of people gunning to the upside right now when you aggregate those 5 days. So if you're going to do an iron condor, that upward strike, that 70-50, is the point of maximum convexity. Right? There are going to be a lot of people wanting to get up that slope to get up there. If you have a condor set in a directional market, you could get run over on your short strikes on the call side. Be really careful. This tells you that could happen, more so than when we're range bound. All right. I know that was a little longer, but it's important. There are times where condors can work. This structure that I see here, if it were to remain intact, is a time where I wouldn't be so sure that it could work. And I'll leave it at that.
Sorry, I was on mute. Yeah, awesome. I think that answers the question easier. If you have anything else, let us know. The last thing we can hit on real quick is because Michael posted the stats for just our P-Transit plus GEX strategy, right? That's the key strategy that underpins underpins everything at Gamma Edge. So that's our 100% mechanical strategy, right? P-trans, upside acceleration zone plus SKEX, profit target for this level, kind of the maximum convexity point. These are the stats for the year so far. I think it's based off a $100,000 portfolio. I'm not 100% sure. But if that's
It is.
not go ahead.
Yeah.
Yeah, 76% win rate, right in line, all that. I like this presentation here better. So this is year to date, 83% win rate so far. I'm not sure why there's a difference there. Probably just a difference in the trades uploaded to TradeZella versus the live spreadsheet. So it has certainly outperformed so far. The back testing rate, which is generally around 75%. Positive expectancy for the year. Winners higher than losers. One loss so far, which was AMD. Working, as designed. Obviously taking a little bit of heat right now just with the opening the legacy positions on, but part of the strategy. Not a ton else to say there. So, I think with that, hour and 8 minutes, good session. If you guys have any other questions, you can drop them in the Discord, comment on Twitter, email us, whatever you want. We'll get back to them. So, with that, we appreciate the time. And I don't know, let us know if you guys like this time better versus Sunday night. I don't know if more people can make it or whatever. If we see the participation's better now than Sunday night, maybe we consider.
Well, the folks in Europe, the folks in Europe and all that probably enjoy it, and the folks that are over in Vietnam and Japan, Hong Kong, they probably
Edge is a global company.
It is actually.
So
it was a balance whether to do 11 o'clock, which is midnight on the Far East, right? Or 10 o'clock. So it's kind of a balance, right? I don't know what the best time is.
Yeah. I don't know, something convenient in America. That's where we live. So Jay, I don't know how to pronounce your last name, apologies. But your question on the exit strategy for the P2P strategy. The exit strategy is when it closes above P trans. That's the only condition for exiting the stock. And kind of as a last thing here for folks not in Gamma Edge, but curious about maybe something that we talked about today. So if you go to GammaEdge.us, free courses, Gamma Edge Fast Pass. This is our entire education module, everything a paid member gets. So it hits on the tools we've talked about today, practical application, the strategies, the frameworks, a little bit of theory of why we think Gamma Edge matters, why options market analysis matters. Even if you don't trade options, you don't need to, but just given the size and the scope of options markets on modern market structure, and it's only getting bigger, and kind of the influence it has and the detail you can get out of the options markets, very important for trading. Remember, options are inherently forward-looking just due to the nature of forward-looking expirations and the information that you can derive from that. So you can get all that in there, right? Sign up for free. That's that. So we appreciate everyone's time today. Enjoy the Super Bowl tomorrow. If you watch that, if you're not in America, you probably don't care about it. But Winter Olympics, got the Winter Olympics. What's better than the Olympics? So I can't believe it's been 2 years since Paris. That's crazy on where the time went.
I know it is a year and a half, right? Because it was August.
Oh, got it. Well, a year and a half, 2 years, whatever. Regardless, it's freaking
crazy
flying by. So
it's crazy.
All right, cool. Well, appreciate the time, everyone. We'll talk to you later. Adios.